Hey guys, what's up and welcome to a new Tesla update video. So today, let's go over Tesla, let's go over the market, and let's figure out what has happened so far and what we can expect moving forward. So with all that being said, of course, as usual, if you enjoyed, don't forget to hit that like button. It does help a lot. This is not financial advice. And again, my membership section on YouTube is live for $2.99, where I essentially share my intraday thoughts on Tesla as it moves throughout the day. So all that being said and done, and moving right into it, the market's closing in just under 9 minutes, looking like Tesla will be closing somewhere around this $280 mark, which will be up just shy of 1% on the day, which compared to the market is a pretty respectable outperformance for the most part, considering the market is flat to slightly red. Now, what does this mean moving forward? So I do think we're in a bit of an inflection point, not just for Tesla, but for the markets as well. And I'll explain why. So let's start with Tesla first, right? Again, just the same thing that I keep trying to repeat over and over again. And again, it's a slow indicator, but I do think it will matter. Doesn't have to matter tomorrow or today or the next week even. I do think it'll matter in a few weeks. Let's just say that ish. That's going to be the RSI again, as usual. I want to keep saying this until it actually, actually starts finally playing out. Because again, it takes a while, right? On the daily indicators and things like that, patterns, they already take a while because it's the daily, right? That already takes a little bit longer to play out compared to something like the 1 hour or even 15 or even especially 5. You know what I mean? The longer time frame, the longer it takes, but the more impact and weight it has. But especially something like the RSI, which already in my eyes, at least the way I use it, is kind of a lagging indicator, right? It's like a fortune teller indicator, but it's also slow, right? It means like, oh, this will happen, but probably a little bit farther down the road. You know what I mean? That's the way I look at it personally, right? It doesn't mean it's always accurate, but usually it is, at least in my opinion, right? Now, with that being said, the way I look at it is like that, right? So if you combine the two, the daily plus the RSI, I mean, that's going to be a pretty slow indicator, right? That's going to be, something a little bit farther out. But with that being said, I do think it is going to play out. So take a look, right? As we go in over here, let's bring this up a little bit higher so you guys can kind of compare, right? What it looks like here and what it looks like here. So the RSI, the highest point it has reached was essentially twice actually, right? First it did it back when it was trading over here at 258. Then it did it again on this candle right here when it went to 274. And that was exceptionally high. That was almost in the 90s, which is like extremely overbought. Then we had a small little cool off, right? Nothing too major. I did expect this to be a little bit more, but nonetheless, we did have a little bit of a cool off. But then we went even higher, right? And then we went higher all the way up to here to 282. Actually, well, we closed the candle. That's the important part. It's where you close the candle is where the RSI shows for that part, I guess, if that makes sense, right? It's not where the candle went, it's where it closed. Now, with that being said, the highest candle we have here, which is also the highest point, coincidentally enough, is right here. You can see when RSI was just over 72, which was back when this candle was closing at $282.50 roughly, right? Then we went down a little bit again, right? That's where I bought the dip personally, and then I did sell. I am completely back to cash on Tesla. I am swinging Disney, and I am slowly playing Disney right now and waiting for Tesla. But with that being said, then we bounce back up, right? And then we pretty much are now looking like we're closing. So we're closing higher than this candle, it seems like, which was the RSI was sitting at 71.5, which we're well below that. We're at 68. And we're going to be, we're like literally $1 away-ish from this candle closure, which is also substantially higher than what we are right now. So an overall pretty massive bearish divergence. The most obvious, of course, being from here. We went down, went even higher, and it's in a lower RSI. Pretty much went to the exact same levels, if not arguably slightly higher. RSI is once again lower highs, right? So those are just consistent bearish divergences slowly piling up. Again, doesn't mean it has to play out today, tomorrow, next week, even a couple of weeks. Like it will take several weeks, potentially even a couple months, really, right? It will take some time, but I do think it will play out over at some point or another. Like I'm pretty confident it will. Now, with that being said, that's one major thing that I personally take into account. Now, what's the other things, right? Like I said several times before, also we are of course at the top of the channel right here, the green lines, and we're pretty much right below the red line, the overall trend line that you can see ever since the all-time highs that we've tested 2 times before the all-time or after the all-time highs, and ever since then we haven't touched it yet, and now we're pretty much right at it. Now, we didn't get exactly close to it last week. I think it was, I made a video talking about 290s for Tesla, and we came up to about 285, just over, which in my books is close enough, which is why I am personally just completely out now, right? That's close enough. I don't want to kind of, fan the flames. You know what I'm saying, right? I don't need to greed for those extra 5, points, those $5 extra, right? That to me is irrelevant. I do think there is a possibility still it comes up to 290s, potentially best case scenario, even 300s, which would cross the red line. But I don't see it going much higher than that. And to me right now, the risk versus reward up here especially with earnings coming up, is really bad, especially considering we're kind of slowly rallying into earnings, which I don't like usually as well. If we start selling off, I will most likely re-enter another position into earnings. I most likely will, or at least sell some cash secured puts. But because we're so close to both of these, lines right here, both of these like trends, if you will, and they're converging right on top of each other, and we're damn near close to it. To me, it's been met and it's close enough, even though there is potentially a little bit more room for the upside. I'm just not that greedy and I don't feel like I need to be. Each to their own, of course. That's another thing to note, right? And like I said also the other day, or yesterday, actually, this was yesterday. So last week we talked about 290s. Yesterday we talked about how we broke out of this potential bull flag and that we can probably get a rally going. But I said how, wouldn't be surprised if we get a bit of a drawdown first to 260 or 276 and then rally up even further. Best case scenario in the bull case, I said it was around 273-ish to retest the breakout down here as well. Instead, what we did was, of course, we came down just to this level here and then we pretty much rallied today, right? We retested it, like I said, and we rallied. Plain and simple. And we went right into the congestion zone, which was this rectangle. I believe we made it yesterday or the day before on pretty much live on the video. And we're pretty much dancing right in it right now. A lot of congestion. This is going to be a massive area of supply. So we'll see how it plays out, right? We'll see what this actually turns into. But if we can consistently if we can start breaking above 284 and start closing at least a 1 hour candle above 284, that to me is going to be signs of 290, maybe even slightly higher, right? But until then, I don't think we're going to go higher. So again, the confirmation is closing at least a 1 hour candle above 284, but I'm not willing to take that risk. I don't think the risk versus reward is really worth it in my point of view. I do think we will go down further. It just might take some time. Who knows how long it'll take, but I'm patient and I'm also playing Disney, which I am very happy with the way the stock is looking right now. Personally, just my opinion. I will go over it at the end of the video briefly if you're interested, but I did talk to my members about that as well. Now, that's overall the main thing I'm looking at here for Tesla, right? The bearish divergences, we're at top of the channel, the green rising channel, we're at the red line resistance. The Bollinger Band, you can see we're pretty much right at the green line and it is still getting a little bit tight, right? The 21 EMA is not too far below us. Wouldn't surprise me if we sell off into earnings up to the 21 EMA potentially, which is around 263 right now. Wouldn't shock me if we do. I will buy that dip, assuming it happens before earnings, of course. And then from there, we'll, of course, see what actually happens. Now, the other things that's important to understand is not obviously just looking at Tesla, right? Obviously, that's important, but it's not enough. The other things you want to look at, of course, is the broader market, because again, usually it can affect Tesla. SPY, you can see, similar to Tesla, is at the top of this green kind of, ascending wedge, if you will, right? And it is essentially getting rejected right at it. Now, again, my lines aren't some picture perfect, wow, it went over, right? It's not perfect. It's not to the exact decimal perfection place, right? It's just a rough guideline, but you can see it's pretty much dancing right around the line and it's getting rejected pretty much roughly around that line, right? So that's not a good sign to see right now, considering we're at the top of it, unless of course it breaks out, then it's fantastic. Same with QQQ, similar concept where it's also bearish divergences on SPY. You can see as it's going higher, the RSI is going lower highs. Same with QQQ, as it's going higher, the RSI is making lower highs, right? And on top of that, the QQQ is also putting in a pretty bearish hammer looking candle. Obviously, we need confirmation to really play this out, which essentially to me would be if QQQ is essentially just red on Monday. As long as QQQ is red on Monday and it doesn't go back above whatever price it closes at today, that's probably going to play it out. The weaker, the better, of course, for the bears, right? Not for the bulls, of course, right? So those are the overall things I am personally looking at right now. Taking a quick look also on the weekly candle, right? Because we're about to close right now, which is perfect. I'm going to remove that right there. And you can see what looks to be it's like, I don't know, this is a tough one, right? So last week we had a potential bearish close on the candle, and this week we also have a potential bearish close on the candle. This one I put a little bit of less weight into. So a lot of people look at this as the hanging man candle, I believe, right? Where essentially it's like a hammer candle, but at the top of a trend or at the top of a rally, which usually again is referred to the hanging man candle, right? Because you can have these kind of candles at the bottom when you're like after a massive sell-off, that's bullish. But if you have these kind of candles after a massive rally, a lot of people view that as bearish. I personally don't put too much weight into it. It could play out bearish. I don't put too much weight into it, but taking into consideration everything else we just talked about, I do think that Tesla, it's not in a position where I would personally be buying. Let's just say that. I would not be buying up here. Just my opinion, of course. So that's something else to consider, right? Potential bearish weekly candle. Again, personally, don't put too much weight into it, but I know a lot of people do. So take that as you will. And the volume on the weekly is not the highest, but definitely not the lowest. Very kind of average volume as well. So, again, even though I think there's a bit more upside for Tesla to 290, maybe even slightly higher, now something I'm willing to risk on. And I do think that the downside potential is higher than the upside potential, roughly where we are right now. especially that we're closing within this congestion period, where last time we closed there, 2 candles in a row, we were fall off by a little bit of a sell-off. So we'll see if this time is any different as well. And again, I just don't like that bearish divergence, that exceptionally obvious bearish divergence on the RSI. Not a fan of it personally. I like to stay away from that as much as possible, except for some scalps here and there, which is what I have been doing. But all that being said, thank you all so much for watching. Let me know what you think down below. If you enjoyed the video, don't forget to hit that like button. The VIX is just trying his best to find something here, to do something, man. It's just really pathetic to watch. But nonetheless, thanks for watching. Hope you have a great weekend, and I'll see you on Monday. Peace.